Alrighty, what's up, everybody? Hope you guys have had a great start to the week. Um, it feels good to be back. Last week was definitely a bit hectic as I was very sick. Due to friends, wanting to hang out, and they're sick, and they don't tell me that they're sick, and I get sick because of them, and then they tell me that they got me sick before you know I knew that they were sick when they were hanging out with me. It's college life. But it's good. Um, so yeah, feeling a lot better now. Almost back to 100%. Just ready to get back to work here on the charts. Get back, consistently, posting stuff daily for you guys on here and everything like that. Really, what I love to do. So let's go ahead and get into it. Today's gonna be about my plan to go from. I currently do have funding, but let's say I go from 100K to 400K in funding by December 2025. Well, really go from 0 to 400K in funding by December 2025 with Top Tier Trader. I am currently with another prop firm. I will not disclose them because I don't want to speak bad about them openly. But they have been somewhat inconsistent since I've been with them. And I have seen that Top Tier has always, they have a very good reputation, a very good standing with their clients and their members and their funded traders. So I would like to join that side of things on the trading side. Even though I do trade futures, I can trade Nas 100 and the S&P 500 there, which is basically the same thing as ES and NQ that I trade currently right now. Um, and the reason I'm looking to do this by next December is because I want to do a better job of managing my expectations for success and managing my timeline for success. Where many times I look at trading and I look at, okay, if I don't make money today, that means I'm not successful. If I don't get a funded account by this point in time, like a week, later, that means I'm not successful. When that's in all reality, that is not the case. That is not true. And I need to do a better job of looking at things in a bit more of a long term perspective and moving in that direction. Uh, Slowly but consistently and gradually, and doing things that I know that I can do, like taking steps that aren't huge steps. Huge steps usually call for a little bit of drawback, whereas measured and calculated steps are things that are able to be sustained and able to be replicated over long periods of time. So this is like the plan that I've come up with so far on how to do so, on how to do this, and achieve this for myself because my golden number is right around $400,000 in funding. Simply because if I can even just do 2% on that per month, that's around $8,000 per month. Where if I get a 90% profit split, um, that's around $7,200 per month. That would be getting sent to my bank account, or sent to my crypto address, which is more than which is what I want to be doing monthly from trading, which is what I would like to be able to do monthly from trading. So yeah, 400K is like that number for me where I could, be trading full time and have enough money left over to do other things and not have to work a job. So yes. So let's go ahead and get into it. So basically, I broke this down. My idea for this is in segments of saving, where and then I have a purchase date. So maybe let me highlight these. I'll put these in red text. I think somebody's calling me. Yep, somebody's calling me. I'll call them back later. Um, Purchase this. Let me message them real quick. Alrighty. So purchase dates here. And then there's saving periods in between those purchase dates. So starting off with with my timeline, I wanted to be a little bit more extended. I wanted to be a little bit more long term minded with this, so that I also had the ability to put money towards a long term portfolio that I am trying to build for myself, as I am naturally not very good at that, but I am getting better at it by putting money away for my 60, 70-year-old self to withdraw from the markets eventually. Shout out to my friend Kyle. He talks to me about that a lot, uh, about that long term portfolio, and he always tells me that I need to, hop on it and be a little bit more uh, diligent with that, because that is very important. You can't just day trade you can't just focus on day trading as your only means of income. That puts too much pressure on that one activity. But yeah, so this timeline is gonna help me do that. It's gonna help me take steps that I know I can take, as long as I hold myself accountable to it, so that I can reach the goal that I want to reach by December 2025, which is even after this last date. So let's go ahead and get started. So by the end of this month, so first, apologies, I will be trading with Top Tier Trader. That is the prop firm that I'm going for, that I'm looking to work with when it comes to building this portfolio of trading accounts. I want to reach $400,000 in funding with them. It consisted of $400,000 accounts, not $200,000 accounts, because if you lose one, that's half of my portfolio with that one company gone. And so I don't want to put that much risk on one account. I would like to spread it out, have each account be worth 25% of the overall portfolio. So that's going to be 400K accounts. Um, and each account is right around anywhere between like 700 to 800, maybe $900. So I just had it at around like 850 saved. That I'll be paying around 850 per account whenever it's time for me to buy them. So I'm just breaking these down in months of three, and I divided 850 by three, which was around $283.33. But then I just round that to 285. So at the end of every single month, I need to add $285 to the bucket that I have of savings, specifically for purchasing funded accounts. So by the end of this month, I need to have $285 saved for the first installment of the Top Tier Trader 100K evaluation. By November 30th, I need to have $570 saved, which is 285 plus 285 for the second installment of the first 100K evaluation. And then by December 31st, New Year's, I'm going to have a full $855 saved for the 100K evaluation. And then on January 1st, I will purchase that evaluation, which completes all of this here. And once I do that, I will start back over with the same formula to purchase the second account. So purchase the first account, purchase the second account, purchase the third account, and then purchase the fourth account. By just doing the same thing over and over again. Now, if I can achieve and knock off some of these goals a little bit quicker than anticipated, then great. But if not, then I'm not worried about it, and I am only focused on meeting my deadlines when it's time to meet my deadlines. If I get blessed, if I have a good trading month where I'm not even looking at saving some of my work income or income to fund this, then I can possibly achieve these goals quicker. But that's not my goal. That's not the goal. The goal isn't to flip an account to make enough money to purchase a funded account. The goal is to save consistently so that I can invest that money into an evaluation account. So yeah. So um so yeah, that this is like my timeline. So at the end of this month, I can cross this off, I can strike it out. And then at the end of November, I can strike this out. At the end of December, I can strike this out, and then on the first, I can strike this out, and that'll be the first. That'll be like I'll be done with like a quarter of that. The goal isn't to purchase this and then pass it in a month. These have unlimited time limits. So unlimited time duration. So I will trade these very conservatively, and I will be trading them while I'm trading like other ones. So like say I get the second account and I'm still trading the first account. Say I'm on phase two of the first account. I will uh I will keep on trading the same way, with the same risk, and not have like a goal in mind of when I need to pass the challenge. Now I want to pass it efficiently, which means somewhat quickly. So I will get into my risk parameters or the risk rules I set for myself later and the entry models that I'll be taking later. But the reason I don't have any pass dates is because I don't want to put a time limit on myself to then be forcing trades and taking bad trades if nothing comes my way within these time frames, within these 3 month increments. And so the idea is, anybody can really make, 10 to 15% on an account, on a trading account, on a day trading account within 12 months. I'm not too worried about doing that. It's more about having the right habits to make sure that I can get that done throughout a whole year, as market conditions change and life situations change. So I am looking to I'm looking to just trade these for as long as they need to be traded to get the account. Um, I'm looking to turn myself into a person that can trade $400,000 in funding, not somebody that is trading $400,000 in funding, somebody that can trade $400,000 in funding. So that focuses more on the process and not the outcome. Um, because anybody can trade $400,000 in funding. That just means you need a login to an account that has $400,000 in funding there. So yeah, so the idea is by December. Let me even just put a line here: 12/21/2025, 400K in top tier trader funding accomplished, attained. So we bold this, make it red. And so this is going to be somewhat my document to keep me accountable to these goals that I have for myself. Um, and it will help me just stay on track as, okay, if it's January and I still hadn't saved for December, then that's an issue. That's something I need to work on and that I will need to catch up with so that I get back on track, so that I don't waste a whole year of just hoping that something goes my way versus having a plan. Because I think this past year, I definitely had somewhat of a plan, but the plan didn't go as planned. Usually, as plans never do. Um, the whole like prop firm industry was somewhat shaken up with all of the regulation being put down on the U.S. prop firm area uh, of the world, where MetaTrader 4 was being just shut down, and brokers were getting taken off of the platform. And so prop firms that were using these softwares and these brokers had to pause their operations to find new avenues to place or to be able to host their traders on. But the thing with Top Tier Trader is one of their owners, Q Banks, he actually developed a trade locker, an alternative to MetaTrader 4, which was definitely ahead of the game, where it came in at a perfect time, where it was still developing as these other prop firms were getting shut down, and these other brokerages were getting shut down, where like MetaTrader wasn't able to be used by U.S. traders anymore, and he was able to come in and fill that void, to the point now where a lot of different prop firms are using TradeLocker in their system because MetaTrader is very unreliable now, as it gets shut down very quickly, as almost as quickly as it gets put up. So I'm not worried about Top Tier Trader going under throughout this period of time. Now it can, but to me they have the lowest risk of doing that. They have the highest somewhat credit rating among prop firms in the space. Right, they're right there with FTMO, as far as like their reputation and things like that. So I definitely am confident throughout my trading career that they will only get better, and that I will be able to get payouts on time, and things like that. So let's go ahead and go into the risk. So a 2R minimum. I Some of my trades I average a 3 risk reward, but some of my trades are under a 3 and some of them are under a 2, where do have a few that are a 1.4, 1.5 R, or a 1.2 R, and things like that, where I don't want to do that when it comes to taking these evaluations. I want to give myself the best possible chance of success by having at least a 1 to 2 risk reward, so that I'm making at least double what I'm risking, especially if I'm going to be risking 1% right out the gate with a 8 to 10% drawdown limit. I don't want to be taking 1.5 Rs, because one trade uh, can take up 66% of your profit overall, and that leaves you with just around a third of your profit, um, that you made from the past trade, whereas you get 50% of your profit from the other. You get to keep 50% of your profit with at least a 2R minimum. I'll be risking 1%. Usually I risk 0.5% on trades, but like I said, I want to pass these evaluations a little bit more efficiently. I don't want to be risking 0.5%, mainly because the longer it takes, the more it weighs on your mental of how long it's taking. And
And
and so whoever that is, can you
yo,
please, yo, what's up? Um, wait, is it cool if I mute you real quick, or if you just mute yourself real quick? I'm about to be like done
yeah,
presenting, and then we can go over the charts. Thanks. Um, Shoot. So, alrighty. So I'll be risking 1%, and like I said, that's just to be more efficient throughout the whole evaluation process. If I'm wrong, I'm wrong. If I lose an evaluation, I lose an evaluation, and I will start the process over again, and I will just revamp until I see that there is something that I'm doing wrong consistently, and it's constantly penalizing me in the form of taking money away from me in the market. Um, so 1% risk when the account is uh, you know more than or equal to uh, $100,000, and then I will be using 0.5% risk when the account is under $98,000, just to preserve it, just in case. Say you do lose the first two trades, it is better to go to a 0.5% risk model, to bring yourself back up to 100,000 or even a little bit above that, and then you go back to risking 1%, just so that whenever you have those opportunities to give yourself more of a buffer, you take those, because like I said, these have unlimited time durations, but you don't want to just be lingering with a funded account evaluation stage, for more than a month, 2 months in my yeah, more than like yeah, more than a few months in my opinion. Like you start to just like lose confidence in yourself, and you're playing around break even, and then you go into drawdown because you get frustrated or something like that, and it all becomes a waste of time. But yeah, that is my risk model. Very simple, but I have to just be very disciplined and sticking with it. If it's under 1 to 2, I'm not taking it. And I'm at risking 1% when the account is at $100,000 or more. And then my entries, as most of you guys know that watch these videos, type B entry. Uh, Type B entry is my favorite entry, where it is based off of imbalances, based off of fair value gaps. Where a high or a low gets swept, we get a structure created on the 5 or the 1 minute time frame. We break that structure to the downside or to the upside, whichever direction we're looking to go, and then price rebalances, gives me uh gives me an entry candle, and then I take that with stops that are based on discretion, because you kind of pick where you want to have it, at least at the low or the high, depending on which way you're looking to go. And then you use different methods of projecting where you may want to see price move towards, whether that's standard deviation, whether that's a Fibonacci, and whether that's even just simply a buy side or sell side level that hasn't been swept yet. So, um, as you guys can see, you guys can read all this here. I don't want to just read it and be super elementary with you guys, but then here are all the pictures. You can pause these if you want to see. So this is on the 1 hour, 15-minute, 5-minute entry here, where in this case I put the stop at this low here because I saw that it was obsolete to put the stop here, because if price breaks this wick low, then we're probably going to be hunting this low, and I don't want to get caught in that. I'd rather just take the loss, cut the loss short, and not let it bleed out longer than it needs to. And then this is these are TP levels where like ideally, like looking back at this was a trade that I took in August, so almost 2 months ago. This would have just been TP, would have just taken the trade off here at the negative 400%, but price did end up going all the way to full TP later with this trade, I do remember. So yeah, that's my type B entry. That's like player number one, or that's like my star player. And then we have the type C entry, which is based off of a break of an imbalance, looking to go the opposite direction, where if you get a divergence between ES and NQ, well, ES and NQ are highly correlated. So when you get a higher high on ES but a lower high on NQ, that is a bullish divergence where the lows aren't correlated. So that that has generally indicated that there will be bullish movement right off of that low. So therefore, those lows become protected. And then you just wait for a break of structure of a bearish imbalance that in normal cases would hold, where price would hold under and then continue the flow downwards. But if once with the bullish divergence, now price breaks it, you enter off of the break of that, you put the stops at the previous low. In this case, in the previous high if you're looking to sell or go short, and then your take profit is based off of it can be based off of a multitude of things. Like I said earlier, it can be based off of standard deviation, and it can be based off of previous highs or lows that have not been swept yet, or that have not been taken. But in all of this, I will be looking for at least a 1 to 2 risk reward. If you want to just read it here, this is just pretty just like cookie cutter like explanation of my type C entry, and then these are screenshots. You can pause this recording to see it, like if you want to look at it a little bit further. So we have the divergences, right? Price breaks off the I entered off of the break of the divergence here, and price flows to the downside to the sell side level that I was looking to see get swept. Price ended up dumping way farther, but it was still a very good trade. Very good trade here. So this is my plan to reach $400,000 in funding by December 2025. I'll be documenting myself doing this, posting it on the YouTube and everything like that. So you guys please just stay tuned. I appreciate everybody for watching. We'll be getting in doing a little bit more chart work on Thursday, and you guys have a great night.